Traders at the Brazilian Mercantile and Futures Exchange in Sao Paulo are buying and selling ethanol, soybeans and sugar. Exchanges worldwide have seen a recent surge in trading and demand for all kinds of commodities. This exchange registered record trading volume in April. More than 4 million contracts worth nearly $200 billion were traded in one day alone. The boom in commodities is translating into profits for brokers.
This is a very sought-after area here.
In Florida, broker John Symes says the increasing value of commodities has helped produce large returns for his hedge fund, a portfolio of investments.
8 years ago, no one was interested in commodities. No one was excited about corn when it was $1.80 a bushel. It's over $7 today. Our business is exploding. And it helps that we have been able to earn consistently 20% annualized when you can publish an actual trading record such as this. This by itself tends to generate a lot of business.
On the New York Mercantile and other exchanges, commodities are often seen as a good hedge against inflation. Consumer prices in the U.S. rose in May at the highest rate in 6 months, in part because of high oil prices. The price of commodities such as gold surged in recent years as investors sought a safe place for their money. Economist Larry Belcher says the weak U.S. dollar, turbulence on global stock exchanges, and the crisis in the American housing market are making commodities even more attractive, pushing up their price.
There are individual investors that are seeing the stock market not being a great place to be right now, seeing the property markets as being a horrible place to be right now, and therefore we've got investment capital. What do we do with it? Well, they're chasing commodities right now.
Belcher also points to demand in emerging economies such as China to explain higher commodity prices. As motorists in some parts of the world turn to biofuels to deal with rising oil prices, the cost of commodities like corn used to make ethanol is increasing steadily. Economist Sean Snaith is director of the Institute of Economic Competitiveness at the University of Central Florida.
Because of the increased demand for ethanol, a lot of corn is being diverted from food use into the production of energy. It's put upward pressure on the price of corn as a result.
Corn prices have soared even higher in recent days following floods in the U.S. Midwest. Meanwhile, hedge fund managers like John Symes continue to make money for their clients by investing in commodities. He expects, though, that prices will return to lower levels over the long term as the U.S. Federal Reserve moves to control inflation. Steve Mort for VOA News, Orlando, Florida.